finally, the last part of this chapter is the last method called the internal rate of return, or the IRR. And this uses the present value concept to calculate the rate of return from any investment. Think of this as I'm working it backwards. So here we're going to actually use our present value of the annuity chart, and we're going to work it backwards to find our interest rate. So it's a little bit different on this one. So here's what I'm looking at. I'm looking at purchasing new equipment. It's going to cost me $33,530. I can expect to get $10,000 each year over 5 years, and I need to make sure that I have a 12% return on my investment. So if I do this, here's my annual net cash flows at the end of each of the 5 years. So let's go back. I'm getting $10,000 each year for 5 years. So this is equal cash flow. I can use my present value of the, we'll go back, present value of the annuity, present value of the annuity at 12% for 5 years. There's my multiplier. So basically, I'm going to get $50,000. I'm going to get $10,000 each year. And that today is worth $2,520. Okay, so that's so I'm going to show you in a minute how we're going to actually look at this. So this uses the net cash flow. The annual net cash flow is the annuity part of it. I look at my percent and I look at for 5 years. But we're going to switch this up a little bit. We're going to make this a little bit more difficult now. So now we're going to look at what we call, hold on, let me go forward. Let me go forward a little bit more. Here we go. Okay, so here's what we're going to do. This is when equal annual net cash flows are going to be coming from a proposal. This is easy to do when it's equal. The amount to be invested divided by equal annual net cash flows. Okay, and what I'm looking for is I'm actually looking for my multiplier. Okay, so I'm going to actually do this to get my multiplier. And so then I take my multiplier to the table because I know how many years, and I'm going to show you, this is kind of complicated. So I know my cost is $97,360. I'm going to get $20,000 each year over 7 years. So when I do the actual math, let's back up. The amount to be invested is going to be $97,360 divided by 20,000. Okay, so here we are right here. So that's going to be this divided by 20,000 is going to give me 4.868. So in here you're actually calculating the multiplier. You know it's 7 years, so you go to year 7. You come across till you find the multiplier. It's 10% return on my money. So what I'm actually doing is I'm going backwards into this. I'm calculating my multiplier. I know my years, but I need to find out what percent. Now, let me ask you something. What if this ended up being like 4.656, somewhere between here and here? Then you literally would estimate that it would be somewhere around 11%. So this is looking at the IRR in a reverse pattern where I'm calculating the multiplier, I know the years, and I'm trying to find the percent. This one is the only one that will be using the present value of the annuity. Okay, here's my advantages and disadvantages. Cash flow of the investment is very important. It takes time value of the money into key play here. So these are really important things as to why you use it. Again, it's complicated. This is the biggest disadvantage for any of these, is that they're actually complicated. Okay, so in this chapter, I've shown you 4 different ways to find out your rate of return. However, just doing the formulas is not always going to be your true answer. There are other things that sometimes you have to look at. So you may have to look at income tax. The more net income you generate, the more taxes you'll pay. Often you might even push yourself into a higher tax bracket. You have to look at proposals that have unequal lives. So how do I know, should I choose the 3-year or should I choose the 5-year? So these are some of the things that could actually impact your decision about how to invest. This concludes chapter 25 on capital investment analysis. I hope you enjoyed it, and I hope it's easy. I tried to make things very easy for you.